Welcome to Trading to Rise. Today, we're kicking off a masterclass on what I believe is the single most important topic in trading. We're not going to talk about some new indicator or a secret strategy that promises to make you rich overnight. Instead, we're going to dive deep and uncover the real reason why some traders make consistent profits while so many others struggle. We're going to talk about the most critical battlefield, and that battlefield is inside your own mind. So let's just start with the big question, right? The one that probably brought you here in the first place. Why do most traders lose money consistently? And maybe this hits close to home for you. You've probably put in the hours, you've studied the charts, you've learned the strategies, but for some reason, the results just don't seem to match the effort. What's going on here? Well, here's the hint, and it's the core of everything we're going to talk about today. For the vast majority of traders, the problem isn't their strategy, it's their psychology. You see, the real battle for profit, it isn't fought against the market. It's fought right between your own two ears. And in this masterclass, we're going to give you the tools you need to finally win that fight. First things first, to win any game, you have to understand the arena you're playing in. And let me tell you, the financial market is a totally unique kind of arena. It's unlike any other game you've ever played. So let's break down its most fundamental and most dangerous characteristic. You could say the market is in a state of perpetual motion. It literally never stops. Sure, it might pause for the weekend, but come Monday, it can gap up or down and continue right where it left off. From a trader's point of view, there's no defined start or finish line. Think about it. In a football game, there's a whistle to start the game and a final buzzer to end it. The market has none of that. It's a continuous, unstructured flow of information, opportunities, and of course, risk. Now, here's why that's so incredibly important. In this game, with no defined start or end, the game only begins when you decide to enter, and it only ends when you decide to exit. The market doesn't tell you when to play. You do. This gives you absolute freedom, which sounds great, but it also means that 100% of the responsibility is on your shoulders. And that complete freedom, well, it creates a massive psychological challenge. In an environment where there is literally unlimited potential for profit on any given trade, how on earth do you decide what's enough? This right here is the breeding ground for greed. The very structure of the market is perfectly designed to prey on that little voice in your head that says, just a little more. I can squeeze out one more kick. And that belief, as you might know, often leads to disaster. This freedom and this unstructured environment leads us to one of the most dangerous and hidden traps in all of trading. It's something that has quietly destroyed countless trading accounts, and most people don't even realize it's happening. We're talking about the danger of becoming a passive loser. Let's use a comparison to really make this clear. Think about going to a casino and playing blackjack. To lose more money, you have to actively take chips out of your stack and place another bet. The dealer deals the cards, the hand ends, and you are forced to make a conscious decision to risk more money. You have to act to be a loser. In trading, it is the complete opposite. Once you are in a position, you can lose more and more money simply by doing absolutely nothing. Your inaction, your hesitation, allows the loss to grow indefinitely. You become a passive loser. Let's walk through the anatomy of this because I guarantee every single trader watching has felt this. It starts simply. You enter a trade, it starts to go against you, just a little bit. You hesitate, you do nothing, and you tell yourself, oh, it'll come back. I'll just wait. But that's not a strategy, is it? That's just hope. And the market doesn't know you exist, and it certainly doesn't care about your hope, so it keeps moving against you. That small, manageable loss now becomes a big, painful one. And finally, you just can't take the pain anymore, and you hit the close button. Not because your strategy told you to, but simply to make the emotional bleeding stop. You were a passive participant in your own financial loss. So, the big question is, why do we fall into this trap? Why do we let hope take over and become passive losers? Well, it's because our own minds can be our absolute worst enemy in the market. Let's dig into how our own internal wiring interacts so dangerously with this chaotic environment. Think about the market for a second. It's a sea of infinite information, tick by tick, minute by minute. It is generating billions of potential patterns, and that is incredibly dangerous. Why? Because with that much random data, you can always find some piece of evidence, some little pattern to support whatever you want to believe at that moment. If you're hoping a losing trade will turn around, I promise you, you will find a pattern on that chart to justify that hope. This mental shortcut has a name, and it's called confirmation bias. It's a natural human tendency that we all have. We're hardwired to look for and give more weight to information that confirms what we already believe. And at the same time, we discount, dismiss, or completely ignore anything that challenges our beliefs. In normal life, this can be pretty harmless. In trading, it is absolutely catastrophic to your account balance. So here's what it looks like in the real world, in real time. Imagine you're in a long trade, you're bullish, you believe the price is going up. Every time you see a green candle or an uptick, your brain lights up and screams, "See, I knew it. This proves I'm right." But what happens when you see a red candle, a downtick that goes against your position? Your brain says, "Oh, don't worry about that. That's just noise. It's just a little pullback before the real move." You see what's happening? You are actively filtering reality to fit what you want to happen, instead of objectively seeing what the market is actually doing. Okay, so let's see how all this stuff, the passive losing, the confirmation bias, all builds up into the final and maybe the most emotionally powerful trap of them all. This is what happens after those mistakes have done their damage. This is the revenge trap. So just picture this scene. You just closed a trade. It was a painful loss, let's say $500. And what's worse is you only planned to risk maybe 100. It got way out of hand because you were a passive loser. You feel angry, you feel frustrated, you might even feel a little bit stupid. The pain of that loss is fresh, and it's sitting heavy on your mind. Now, just a few moments later, the market presents a brand new, high-probability setup. Your strategy says it's a good trade, you enter, and it quickly moves in your favor. It's now showing a clean, easy profit of $250. Your rules say this is a perfectly valid place to take your profits. The objective, rational choice is clear. But what does your emotional mind, still stinging from that last loss, tell you to do? To take the profit? For almost every trader caught in this emotional cycle, the answer is a hard no. They're not thinking about this new trade and its own potential. All they can think about is the $500 loss from the last trade. Their internal voice is screaming, "I have to make my money back from the market." So that $250 profit, it feels like nothing. It's not enough because it doesn't erase the pain of the previous loss. And please listen to this carefully because it's the most important point in this whole explainer. The moment you feel that need to get it back, you have turned the market into a personal opponent. But here's the truth. The market doesn't know you exist. It didn't take your money. You made a series of decisions that resulted in a loss. You can't get revenge on an impersonal force like the market. The only person you're actually getting back at is yourself. You are punishing your future profits because of a past mistake. Okay, that was a lot of the bad news. We've looked at all the problems, the perpetual game, passive losing, confirmation bias, and that nasty revenge trap. So now let's shift gears and talk about the solution. The path to consistent profitability is not about finding some magical indicator. It is about mastering your inner world. This right here, this is your real work as a trader. Forget about predicting the future. Your job is to stop fighting the market. It's to learn to sit back, listen, and let the market tell you what it might do next, instead of you trying to force your will onto it. It means taking absolute 100% responsibility for every single outcome, win or lose. No more blaming. It requires you to honestly confront your deep-seated beliefs about what it means to lose money or to be wrong. And finally, it's about letting go, releasing yourself from that toxic, account-killing need to get revenge. I want you to let this next thought really sink in, because it could be the biggest mental shift you ever make as a trader. Your objective is not to be right on every trade. Your objective is to be profitable over a series of trades. Too many traders are obsessed with their win rate, with being right. But the best traders in the world, they're wrong all the time. They take small losses constantly. Their goal isn't to feed their ego. Their goal is to run a profitable business. That's the only game that matters. So, what's your next step after watching this? I want you to make a promise to yourself. Don't let this just be another interesting video you watch and forget. Take this awareness about being a passive loser, about confirmation bias, about the revenge trap, and I want you to actively look for these things in your very next trading session. Just observe your own thoughts without judgment. And if this masterclass was valuable for you, make sure you subscribe to Trading to Rise, because in our next episode, we're going to build on these psychological foundations and give you even more practical tools to master your trading mind. Thank you so much for your time.